Hey guys, Mike here. So obviously another big week coming up in the stock market. We're going to have CPI data coming out. That's always fun. A slew of earnings, which we'll go into. Probably the biggest ones to be looking out for. I don't think there's any of them that's going to move the market at all, but there could be some big swings within these stocks because we've already went through the big, real mega cap stocks that can move the market, and we're kind of past that now. So CPI data is about the only thing I think that's really going to, obviously could move the market. But then again, as you've seen, the market, it doesn't seem to matter what comes out right now. As everybody jokes, bad news is good news. So if we give high CPI data month over month, increased again, it probably won't knock the market down at all. Meme stocks will continue to go. Chinese IPOs will probably continue to go up 25,000%. And then high growth stocks will probably still be going up, which a lot of them report this week. So a lot of them have already ran up quite a bit. So that's going to be the really interesting part about this. Remember, they were beat down before. Now a lot of them have ran up some 50 to 100% within 30 days. And so it's definitely going to be interesting to see, are we going to be selling the news or buying the news this week on these earnings? But I did, every time I find something, because I'm always researching, I like reading about history, especially when it comes to the stock market. So I was reading about the dot-com bubble, and I felt this was fascinating because I've always told you the stock market, history doesn't repeat itself, but it rhymes. Nothing is exact, the way it happened before, but it can be really eerily similar. And I've showed you guys some of this, but I ran across the company's name when I was reading the history of the dot-com bubble again, and I couldn't believe it's hard to find a company back then. It was a really big name company that ran up astronomically in the dot-com bubble that did the same thing during this. Because if you don't think you just lived through a dot-com bubble, you just did. You just lived through a bubble. It just wasn't the dot-com bubble, right? It was just a high-growth stock, SPAC stock type bubble. And I'm going to show you what I'm talking about. But I just couldn't believe this one company did it twice, right, in the last 23 years now. And that kind of stuff just fascinates me. And then we're going to go into, stuff to look out for. Like if you're going into, the mega cap stocks, the high-growth stocks, understand a lot of people don't think these companies are very expensive right now. And, each one of them may not be, but when you take into account the growth they have right now versus what they did have, and then where the PE ratios are and what the earnings per share is guiding to be in 2023, you might want to take notice of that, okay? Because the stuff isn't being made up or anything. And so some of you have seen this, but I showed this to the members. I don't know if I showed it to the public a while back, but if you look at the NASDAQ here, this is during the dot-com bubble right here. And then we go over to ARK-K, and all I'm going to do is I'm going to copy right here these candles, right? And so you can almost see they're almost identical in a way, not quite perfectly identical. And we're going to copy it, and then we're going to go and we're going to paste it over the NASDAQ 100 and show you, yes, you have lived through a bubble. Look at this right here. I call it the dot-com bubble, call it what you want to call it. But that going up right there and going sideways, that is almost identical. You can see ARK traded sideways, but if you look at where they all ended up in the same dang place. And then look at the ARK stocks right here. DraftKings, that's called a bubble. You look at Teladocs, that is a bubble. You look over at Roku, that is a bubble popping, and then Twilio, that is a bubble popping as well. Now, I read this right here, and I ran across this, and check this out now. You'll recognize this name. You already see it, MicroStrategy down there. That's right, with Michael Saylor, who tells you to sell your home to buy Bitcoin. On March 20th, 2000, Barron's featured a cover article titled "Burning Up," warning internet companies are running out of cash fast, which predicted the imminent bankruptcy of many internet companies. This led many people to rethink their investments. The same day, MicroStrategy announced a revenue restatement due to aggressive accounting practices. Its stock price had risen from $7, tell me if it sounds familiar, per share to as high as $333 in 1 year. And then in 1 day, it fell 62%, down $140. And if you look, this ain't the first time it's been through this. Look at this. This is the dot-com bubble. And this is 104, not 7. But you can see, even go from 104 to a high, what was that? It was up 900% or some crazy mess. No, I'm sorry, 1,547% from there. So going from $7 to where it went to is way more than that. And then if we scroll over now, what just happened, you can see over there to the right, as it hadn't been doing anything during this last bubble time period, we went from around $122 right there, somewhere in that, to a high of, $922? So only up, 821% that is? So not as much. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And so it just shows you a company, obviously survived one, but now has survived two of those bubble-like scenarios and still going, because he founded it in 1989, I believe it is, even though Michael Saylor is stepping down as CEO to be the chairman, I believe. And they're going to replace him with somebody else. But, still going. Right, so this ain't his first rodeo when it comes to these bubbles and seeing his stock pop like that. So he's used to it. It was just amazing seeing. I was like, is that MicroStrategy, the same company with Michael Saylor? And it was amazing, because remember, Amazon wasn't the same Amazon you have these days. So it was hard to find a company that survived it, actually ramped that much, come down, just to go through something similar right now. And so I just thought that was interesting. And one thing I want to clear up, we talked about nominal wages the other day, right? And how nominal wages are increasing. And I said in that video, I said, well, real wages are still decreasing because, you got to consider inflation, right? And if you look right here, you'll see plain as day. I mean, this right here, real wages just have fallen off a cliff because of inflation. And if you look back over there at 08, way below that, 2011, they're just continuing to go basically straight down at this point in time. And this is the kind of stuff I was talking about I find interesting. So if you think about investing in these companies, which I have as well, but understand the combination of things that's happening right now. We're in a tightening cycle. And I showed you some of these separate, like Amazon, for example, what its quarterly growth was, Google, stuff like that. But if you look at the FANG stocks, which obviously are the big boys, right? And over the last year, I guess you could say, look at what their quarterly revenue growth has been, how far it's going down right there. I mean, that is just staggering right there. And understand what I'm talking about when I say expensive. Some of them are not, some of them are. All right, and there's different reasons for this. But this is the S&P 500 tech sector, the best PE ratio. And you can see right now around 21.8, I believe, is where we stand currently. And this right here is the Fed funds rate. So you can see that's where we were back in 2019, the last time we were raising them. 2018 and 2019. To the right, you can see that's where we're raising them. So we're at the same level. But look at where the PE is on the right. Look at where it was back in 2019, right before we started to pivot and lower rates down. And you can see we're higher right now. So we're going higher into a tightening cycle. Understand the PE ratios took off in 2019 because they started lowering the rates. They stopped doing that. We still have rate hikes yet to come. So this Fed funds rate is going to be higher with a higher PE ratio on top of it. And the reason why you got to be concerned, at least know about that, is understand where earnings per share is going. I just showed you like some of the big boys, what their quarterly growth are. And if you look at where EPS is heading right now, it's heading down. Why is it heading down? Because we know we're not only in a slowing economy here, globally. You just had, what was it, the Bank of England say they're projecting 5 quarters of recession, for God's sake. So we know globally there's a slowdown as well, and most of these big companies get over half their revenue from overseas anyway, which is why you're seeing these companies, which is why I brought this up the other day, that are proposing these huge stock buyback programs by the billions. Some of them are taking out debt just to stock buybacks because they see their revenue growth is slowing, right? Their earnings per share is going to be lower. They'll be lucky to meet the numbers, let alone blow them away. And so what they need, and plus there's not going to be as much liquidity being pumped into the system for people to be buying stock. People are more worried about actually paying bills and things of that nature and worried about maybe even losing their job, so they're hoarding money right now. And so, but I did have a conversation. Remember I mentioned the other day, I said, I think people not buying houses because it's so expensive is actually propping up the stock market now. And I'll tell you how I think I can prove that and ask around for everybody that wants to buy a house. But, I was talking to a guy the other day, a friend of mine, and he said, I'm going to go ahead and rent for a year, and then, because the housing market down here is too expensive, and I'm just going to take the money for a year and throw it in the stock market, and then go buy a house a year from now. So he's going to be throwing in, anywhere $50,000 to $100,000 into the stock market, which wasn't going to a house, because they just sold their house. And so, it's like, actually, I guess it's going to be more money than that going in the stock market. And think of how many people, because you got to put a down payment, most people do, when they take a loan out, and it can be quite substantial, anywhere from $20,000 to $100,000, depending on what kind of house you're buying and what kind of loan you're taking out. But that on top of the stock buybacks, right, is because you're even seeing high growth stocks do this, which is rare. right? I mean, Facebook just took out its first amount of debt, for example. Apple's taking out debt, and they don't even need it because they got so much cash. But they figure, why not? To do stock buybacks, dividends, And so that in alone can prop up a market. All right, and it can make those individual stocks go up. Plus, you see a lot of people saying, well, wait a minute. If these big FANG stocks, their growth is slowing, and that's what happens when you get as large as they are, on top of, the fact that a lot of them are getting much more expensive than, say, a high growth stock, for example. I'm talking about price-wise per share. People just look at the per share and they go, oh, it's much easier for me to get this stock over here at 25, 30, 40, 50 bucks than to pay 160, 300, whatever, stock you're looking at, or 800 for Tesla or something like that. And so they look at that and say, well, their earnings on most of those stocks, they don't get a lot of earnings overseas. They're just getting in the United States. And the United States economy right now, and as far as like labor and things like that, seems to be pretty good. And our energy prices aren't out of control like Europe is right now, and China. I watched a video today, which I'll try to do a video on for you guys. It was actually a scary video talking about their economy. I mean, it was very detailed, and you don't know really what to believe, but it doesn't look good over there. And so I'm going to try to bring that to you, because if something happens to their economy, I showed you that little globe. They're the second largest economy in the world. Like if they had like an '08 moment like we did, and they have that over there, the whole globe is going to feel it, right? And so that's a whole different story. And so it's such an I mean, I don't know. I had somebody like try to, troll me or something, saying when I said, guys, this is the most confusing market I've ever seen. And I'm just being honest. Like if you want somebody who's going to lie to you and blow sunshine up your butt or something, there's plenty of channels. They'll tell you what you want to hear. This is the most confusing market I've ever seen. Like how it can switch so fast and go from just terrified to risk on like crazy, and then the meme stocks, the Chinese IPOs, all this stuff just like that. Boom. And then I'm going to come up with a video tomorrow, though, saying why that kind of concerns me and why it is a little more confusing. And, another thing which I tried to tell somebody in the comments was, they said, oh, Warren Buffett don't worry about macro, That's totally untrue. Warren, and I actually put in the comments of that guy and showed him exactly, because Warren Buffett has made some of his greatest trades and investments off macro data and made billions for his investors doing that. He doesn't like to talk about it. What Warren Buffett doesn't like is economists, and I don't blame him because they're terrible. He said if you're a company who employs an economist, you got one too many employees because they can't forecast. And we're living through this right now. They couldn't forecast last year what was going to happen, and currently right now, the Fed has a lot of economists working for it, and they still stink. They still can't forecast it, right? And so, I agree with him on that. And yes, he doesn't dive head first. He doesn't really talk about it too much, but he's made some huge macro trades and investments, for that matter, using options and all kinds of stuff in the past that made billions of dollars for Berkshire Hathaway and their investors. So, let me just set the record straight on those couple of things. And so, earnings-wise, there's no earnings this week that will tank the market. They don't have big enough market caps, I don't think, to do it. But it will tell us a lot about us, the consumers. I expect more sunshine to be blowing up our butt from the hotel, people like Hyatt and Wynn Resorts, the gambler and all that stuff. I expect that to happen. Palantir is going to be Monday morning. We'll see where that goes with defense and things like that. Roblox is Tuesday after the bell. I'm looking at that one very closely. Coinbase after the bell Tuesday. Unity's another one. Plug Power. Let me see. Thursday and Friday are, to me, very boring days. You got Dillard's. Woohoo. Wednesday, though, you got Disney. We're going to see how the parks are doing, how the streaming services are doing, right? And see how that's going. Before the bell on Wednesday, you have Wendy's. We'll see. I mean, I know I still eat there, so we'll see how people are doing, because you don't exactly need Wendy's, but it seems like, listening to McDonald's, people are still spending, and they're still able to raise prices. And that's the key. Are they able to raise prices of these hotels to continue to do that? Because there's going to come a point, guys, and this is why I say it's so, like, nobody really knows where we're going, because the only reason they're making numbers, they're selling less, like, per unit, but the cost is so much more that that's why they're making their numbers, right? That's why, it looks great. But even the grocers said that people are buying less items at the store. We're consolidating down. But the expenses are just so much greater, it makes up for that. And so the question is, there's got to come a point where they cannot raise prices anymore, right? Chipotle said they're raising prices this month again. There was multiple companies raising prices this month and this quarter again. There comes a point where consumers will be like, hey, that's enough. I've already done it with certain items in our household. My wife's done it. We've gone from name brand, going down just on general principle. We're sick of it. And when you feel like you're being taken advantage of, you've had enough. Maybe we'll go back to them one day when they decide not to take advantage of us. But I just can't do it with certain brands. I'm like, no, I'm not going to keep doing this. This is ridiculous. Let me know in the comments if you've done that with anything. But there will come a time where people are going to say, we've had enough. And when they can't raise those prices anymore, if inflation is not coming down, what happens to earnings? That's the key that nobody, the economists obviously don't know. They keep predicting it. They're wrong every single month, right? And so they're wrong on the jobs. They're wrong on, inflation. I mean, I don't think there's anything they've been right on. And so that's what we got to look forward to. Again, there is nothing I see in here that should rock the market in any way, shape, or form. You could see, obviously, in these high growth names, huge moves one way or the other, right? One way or the other. And it seems to change from week to week. So we're going to see if bad news remains good news or does it flip, okay? And so that's kind of key. After watching what happened with the jobs data, we should have tanked the market and it barely did anything to it. That's kind of where we're at. So we'll see. I'll try to put out some earnings videos as well on some of these probably to see what's going on. But like I said, the biggest number to look for is discretionary spending. And any company that's what they survive on, that's what we want to see because that's what goes first, right? We always keep buying the essentials, but discretionary spending on things we don't need, is that coming down? And so that's going to be the key. So hopefully you got some out of this, guys. Hope you have a good rest of your weekend, and I'll see you tomorrow, okay?